Currently, your business is faced with a generous traffic of customers coming to your business. You are making sales, but your bank balance still empty. This is the number one reason most SMEs fail. And it's not that they are not working hard. It's because their finances are controlling them instead of the other way around. In this video, we're going to look at why small businesses fail financially. And then I'm going to introduce you to some of the tools that you're supposed to be using if you haven't yet started using these financial tools. So do stay tuned in. Hi, I'm Kenneth Phiri from Phiri Consulting, where we help entrepreneurs like you build scalable, profitable, as well as fundable businesses. If you're new here, please do consider subscription to the channel. Also like this video and many others on this channel, and also share to someone else, an entrepreneur like you, or someone who wants to go into entrepreneurship. Let's get people more and more involved in entrepreneurship. Currently, I'm coaching quite a number of small to medium-sized entrepreneurs. Some of them, usually when they come to us, they are within the range of about 40,000 to 250,000 a month in revenue. Okay, underline the word revenue there. Okay, so, but surprisingly for them, they do not know exactly what's going on, because come month end, when they're supposed to pay bills, maybe pay the 2, 3, or 5 workers that they have, they still need to borrow. They find themselves still looking for other ways to finance their expenditure. The question then is why? The answer is always very simple. It comes back to no budget, no cash or plan, no financial clarity. So because of that, then they find themselves with all these questions and no solution in sight. The mistake for most of them is that they're mistaking activity to either growth or to profitability. So there has to be a clear distinction on whether you are growing financially or you are just doing a lot of things that appear to sort of make you money. Or for instance, the majority confuse revenue for profit. So they see a lot of money coming in, and without a proper breakdown on what their expense account is, they find themselves in the red all the time, even after having made a lot of money. So in this video, let us look at some of the tools that you can be using in your financial planning to make that turnaround and start moving towards the kind of growth that you as an entrepreneur in your business should be experiencing right now. So basically in this video, I'm going to introduce you to some of the tools. And in doing so, this is just the maiden video, episode number 1 of a series of videos that we're going to be doing on financial modeling and financial tools. So please do stay tuned, and also make sure that you hit the notification button to let you know exactly when these other new videos are coming through. Okay, the first tool that we want to consider is called a budget. A budget, in simple terms, is a financial plan. Now, a budget will show you exactly what the proposed expenditure as well as the proposed the income, where the income is coming from. All right, so in that particular budget, what you need to have is you need to have a allocation of resources based on a priority in terms of objectives. Now, which objectives are you prioritizing? And for those objectives that you are prioritizing, they must be the first one to be allocated whatever funding for that activity to be done. So for most people, the biggest problem then is, one, either there's no budget at all, which means that your expenditure is erratic. You spend according to either how you feel or how you see things, which might be problematic because you might fail even to what? To prioritize in the process. And for other entrepreneurs, they do come up with a budget and they fail to follow through in that budget. So a plan that is not implemented is as good as no plan at all, because you did not follow through. Or for some, at the first instance of a little bit of divergence or a shortage here or there, they throw away the plan saying probably this won't work. So you didn't see the plan through. You didn't try it all the way to see whether it's going to perform as you planned or not. The second tool then is a cash flow plan, which is sometimes known as a cash flow forecast or projections. Now, for a lot of businesses that end up finding themselves in a situation where there's nothing to cover the operations or the expenses in the following month, the main reason usually is that there is no cash flow planning, there is no forecasting. So you're just surprised when it comes to that period where certain things must happen. There is no money. Why? There was no cash flow projection or cash flow plan. Now, a cash flow projection will help you see clearly what your expenses would be, what your expenses are, and how much income is coming in. Obviously, you're projecting, maybe you've got a tangible physical product, you've got demand forecast, which then will lead to how much sales as far as revenue you are forecasting, and then also how much your expenses will be. Then, which means that you are going to compare the two and see whether you're going to have sufficient money in to spend in the forthcoming periods. If not, then something can be done to make sure that allocations in your budget can then cover that particular expenditure, or if you need to raise extra money from other sources, that can be done to avoid shortages in funding or resources whenever you need it. So always make sure that you've got a cash flow plan or projection, especially if you are running a business where you need to buy a stock and stuff like that. In most cases, there are opportunities for you to buy on credit, but credit comes with interest. So cash flow tells us exactly how liquid your business is. Is your business having a positive financial state as far as liquidity is concerned? There are ratios that we're going to deal with later in terms of liquidity ratio and so forth and so forth. So do stay tuned for the upcoming scenarios and videos that we're going to bring you on this particular channel. Then the third tool that we're going to be considering is called the income statement. Now, the income statement, you are doing financial reporting here, and we are basically trying to report the financial performance of the particular business. So remember, I said earlier that a lot of businesses have got money coming in, but come month end they find themselves having to borrow to cover their expenses. The issue is that their financial performance is a misleading one. So which means that they've considered revenue as if it was profit, or they've considered income as if it was profit. So then your expenditure then becomes erratic, thinking that you are tapping into the profits, but this is still revenue where costs are still not yet excluded from there. So the simple calculation or formula to get profit is going to be revenue minus cost, which gives you profit. Now, this is in general terms, but when we come to actual financial terms, then there are different types of profit as you go. So you will start always with your revenue, remove your cost of sales. That will give you what we call gross profit, and then on the gross profit, then you add other operating income minus operating cost, which now gives you the net profit. The net profit then is what we're looking for as businesses, as entrepreneurs. Net profit, not gross profit, because on gross profit there are still other expenses, operating expenses, that still needs to be excluded. There's still other operating income that still need to be included. So it doesn't really give us the right kind of picture that we want to paint as far as profitability is concerned. All right. So now, having said that, then this means that you need to have a clear picture as far as the financial performance of your business is. Now, this now takes us to the fourth book that we're going to be looking at. And this fourth tool is called the balance sheet. Now, in the balance sheet, you're looking at the financial position of that particular business. In the financial position, you are looking at exactly the worth of the business, how much or what is the value of your business in terms of its assets, in terms of the owner's equity, as well as in terms of the liabilities. So basically, you are going back to the accounting equation where it says that assets is equals to owner's equity plus liabilities. So to find out exactly how much value belongs to the owner, and then you're going to say assets minus liability equals to owner's equity. Now, this is where the problem begins, because for as long as the assets are able to cover those two, owner's equity and liabilities, then we're okay. Or for as long as assets are able to cover our liabilities, then the business is okay. However, the problem then is, no matter how much asset you have generated, if the liabilities that you have are greater than the assets, then we've got a serious problem. We're talking a business that is negative. I'm sure you have heard of situations where businesses fail to pay creditors. Now, this creates problems because the assets are not able to cover all the liabilities. A better scenario, as I said earlier, is a situation where your assets far outweigh the liabilities, which means that then there is something that is left over for the owner, which in this case we call owner's equity. So with this in mind, what we're going to do then is I'm going to introduce you to the first free template that we have created for you. Is a free SME budget template. You can download it for free. Just click the link and download it for free. Moving forward, what we're going to do is, as I said, we have just introduced this. Be on the lookout for the series that we're creating on this, because a lot of people that were communicating with us either in training or in other modes of communications and the surveys that we have collected data on, financial modeling, financial planning remains the most problematic issue that they are facing. So we have obliged and are bringing you this series. So make sure to stay tuned. Make sure you subscribe and hit the notification button so that in all times you are praised when we bring you this fresh and exciting content. Otherwise, this is Phiri Consulting, where early preparation equals excellent results. Thank you so much for watching. Subscribe. We'll see you in the next video. Bye.